Hello, today is October 30th. It is the last trading day of October. It's been a brutal week. Got to be honest about that. It has not been fun. We have done some very good protection work during this period. It has not been perfect. It's still an ugly week for us, being 100% honest. But for the month, we are about flat. In the market in general, the S&P 500, which is the benchmark for most of our clients, about 99% of our clients, is down about 3 point some percent. So again, ugly day. This is what it looks like right now. These are never fun days. We're not trying to hide that. And again, this is for informational purposes only. This is mainly for clients. If you'd like to become a client, that's great. But mainly this is to keep our clients aware of what's happening, not a recommendation, just to kind of talk you through the puzzle of our job. The puzzle is basically trying to figure out the market, which is extremely difficult to do. But over the past couple months, we beat it by about 4%. And we feel like we're in great position going into the election. About 2 weeks ago, we raised 40% cash on the exact day that was the top. Doesn't always work out that way. To be candid with you, some things that I need to improve on and things that I constantly watch is I'm very, very good at picking the day to back off risk. Where I need to get better is actually adding. So these are one of those times where you're not going to like it, but this is getting very close to a time where for me to continue to beat the market, I have to add. And so I have 60% invested, 40% cash. And we will need to get invested very soon. So keep that in mind. Like the S&P 500 is very difficult to beat. And if you want those 7% annual gains on average, keyword average, then I have to make sure I'm invested. And so when I protect about 3.3% or 4% over 2 months, it's getting to a point where I need to say, hey, I need to start adding back some of that cash. So I want to make that known to you that I will be adding, and it's going to get worse probably in the news. And that's where I need to be adding. So understand that. Just want to keep you posted. The week, brutal, horrendous. We are down about 4% versus the 6.2, actually about 3.9 versus the 6.2. You know, it saves some. I wish it would have been a little better, but still 2.3% savings is still money saved. And I have 40% to add. So we feel like we're in a really good position. Again, it's impossible to time perfectly. We did do quite well in reducing risk. For the month, shows the S&P 500 down about 3.3. We are pretty much flat for the month. So we did a good job in risk management there. And again, we'll need to add very shortly. Again, I'm being honest with you and saying I am very, very strong historically. In 2018, time that dip. In 2000, the most recent dip, saved half there. Where I need to get better is adding on dips and basically saying, I know the news is horrible. Everybody thinks the world is ending. Let's add it here. I don't think it's that bad. But COVID cases in the Eurozone, which is really what I'm watching, is the Eurozone area and case count increasing. I think once we get through the election, things will help. That's one more unknown off the table. Again, we've talked about the performance historically. When the current president wins, or if he does win the election, usually the market does a little bit better. Again, has nothing to do with politics and pushing Republican side. That's just historical fact. Whether the president was Republican or Democrat, usually the current president, if they do get reelected, the market does a little bit better and goes back to normalcy a little faster. When we get a new president, we also do well in the market. It just takes a little bit longer to get going. So again, it has nothing to do with politics. Who knows if that'll come true? Again, history is a great barometer, but there's been a lot of facts even this week. Like October 28th is historically the best trading day of the year. That was a 3% down day. So take history, throw it off the map. But I'm okay with what I'm seeing technically. It's ugly, but I like the fact that I have 40% in cash. So some levels that we're watching right now, let me update this. The S&P 500, again, we're taking a macro perspective, looking at the overarching S&P 500. This is basically testing where we started at the beginning of 2020. So it is testing right here, 2020. Here we are. We are basically at that same level, tested that level exactly overnight and 2 more times today. I think that is a key level to watch. We continue to bounce off that level currently. Doesn't mean it'll continue. I think with a lot of the unknowns, I don't feel comfortable adding a ton here. I added a little bit, but very little. So we are still 40% cash. In new monies that clients added, I did add a little bit to get them back into about 60% invested. So that's why we chose to do those additions, and it actually has paid off thus far. So those are some of the key levels. Let's keep moving through the chart so we don't spend too much time. This was the short-term view that we showed you last week to say, hey, if we get through here, it could be ugly, and it did. I have chosen not to add, which proved to be a wise decision, but I'm telling you, I'm not going to be selling here. I have 40% cash. It's a good position to be in. You might not like that, but we're actually very, very oversold at this point. So I'm looking for confirmation to buy very soon. Again, there's kind of your double tap at the bottom there. We've actually gotten close to 3 times. Hopefully this holds. But in short, a lot of the things we've been saying has been very accurate. Again, it's impossible to time it perfectly, but we have done pretty well on protecting capital. Do I like a down week? Absolutely not. But we are doing okay, and that's key. One thing I don't like is the 8-day and 21-day moving average did cross, but again, I already had 40% cash. I'll show you the level. I mean, it was almost perfect. This green candle a couple Mondays ago, I went 40% cash saying it's not worth the risk into the election. That proved to be beneficial. It was a risk-reward decision, and it paid off. So, again, I don't like the fact that I'm losing money, but the fact that I have 40% to add here is a great position to be in. Again, for perspective, this is the NASDAQ now, which I'm watching very closely. We saw September, ugly dip, quickly recovered, ugly dip. Again, this is a move of 10.4%. So if I'm even for the month, I'm okay with that. You know what I mean? It's still an ugly week, down about 3.9 to 4%. I don't like that, but for the month, we're flat. So it's all perspective. It's going to look ugly for the week, but for the month, while I hate it, it's basically about flat. So it's all perspective. We talked last week that, hey, it's interesting. Historically, the 10-year yield or interest rates in general tend to rise into the election. That is continually being the case, and it's actually pushing financials a little bit higher, which is very, very interesting. And if COVID cases continue to hopefully decline, hopefully things chill out in the Eurozone a little bit, because unfortunately we're kind of following, our markets are following their markets. If things chill out, it could be that the Russell 2000 gets a little bit more of a bid. That is definitely something that I'm looking at. Asset manager exposure, essentially, they're still at 77.5% active management. So active management exposure is still 77%. Not the highest I've ever seen, but not the lowest either. So no real opinion there. I'm surprised it's not a little bit lower invested, to be honest, with the risk involved. The McClellan Index, we've been here before where we said, hey, when it gets to about even, we need to make sure that this holds. We're getting there. I would not be surprised to see it flip higher when we get through the election. I'm not predicting that. I'm not going to trade off that opinion. I'm going to trade off price action. But it would not surprise me for that to occur. Here is, again, the Russell 2000 versus the S&P 500. It keeps bouncing off this level. I do think in the short term, near term, probably midterm, we do have the Russell 2000 outperform. For that to happen, I think it's going to have to probably see improvement in COVID cases. And finally, the candlestick movement that we've been kind of showing here. One candlestick, boom, a breakout above 40. Not pretty. Yesterday we said, hey, usually when you get a candle like this, you get a couple retests. That is definitely happening, which is why I chose yesterday. We had a nice little rally relief out of nowhere because Thursday was one of the biggest days for earnings, and it unfortunately disappointed some investors. Just so you're aware, earnings have not been a disappointment, which is encouraging. So the backdrop is still strong. The Fed is helping. Earnings are hanging in there. If we can have COVID cases chill out and death count calm down globally, I think we have a really, really good shot of having a great rest of the year and probably continue for quite some time with the backdrop. But again, it could take some time. So I'm not trying to be just optimistic to calm you down. I have 40% cash, so I feel like we're in great position. So again, remain calm. The election is Tuesday. We have 40% cash. You should hope it goes lower. I know that's difficult to stomach to see your account go down, but I am going to be adding, okay? I want to make that very clear. I'll be watching confirmation. Again, I did not get pulled into the mess yesterday. Fortunately, I basically said I think that this is going to be not held, and it was not held. So it worked out quite well. Not buying yesterday, bought a little bit today, and I think that's going to work out completely fine, especially in the short term. So hang in there. We are in good position. It's unfortunate what has happened this week. We're okay from a performance standpoint this month. Am I frustrated that we were about 5% higher at a point in this month? Absolutely. But at the same point, you'd be much worse had we be 100% invested. So basically saved about half of what was lost. So never going to time it perfectly. Where I need to get better, and I'm going to follow suit here, is buying these dips. Now I need to see confirmation. Have not seen that yet, and that's where we stand right now. So hang in there. We're almost through this. Basically, for the last week, I've been saying we need to get through this week and next week. I think that could lead to very good things. If COVID continues to increase or COVID case count continues to improve, I think the market has a really good shot of taking off. So that's all I got to say. Hope you have a great weekend. Again, this is not at the end of the day. This is midday. There's a saying that basically says, go feed the ducks. In times like this, when you're 40% cash, not seeing confirmation, you don't do anything stupid. You don't add trades, and you don't reduce positions because we have 40% cash. So hang tight. If it worries you, don't watch it. Check every couple months. And I think a couple months from now, you'll be surprised how much improved this could be. If price action shows us breaking even more levels, I will get out, but I don't expect that to happen. So have a great weekend. Hang in there. We'll get through this. Don't let the politics change your opinion on the market. You'd be shocked how little that has anything to do with the market. It'll be a short-term move, but if the market feels like it's a good opportunity to buy, it's going to buy regardless who the president is. Okay? Hang in there. I'm here for you. Let me know if you have questions. Thanks, guys.